Hey, welcome back, everyone. It is time for another red hot cover call video. Well, hey, look, we're back behind the mic, fired up, because today I'm going to show you a couple things. I'm going to show you my numbers for June. I absolutely closed my books just yesterday, and I want to show you what I'm averaging for the first 6 months of 2022, a year for which the stock market has crashed some 21%. I'm also going to show you a trade. I want to help you manage a trade where you own a stock much higher. The stock is now much lower. You've written a covered call, and guess what? The stock is above your strike price. Means your shares are probably going to be taken away. But we have time. We have over 21 days. I'm going to show you a trade that I'm doing right now. And I'm going to share a quick story with you here in the beginning. So if you're new to this channel, this is what I do. I come back every single week, bring you a timely and relevant covered call video or selling premium video where we put money on the table every single month, paying the bills. I love to share my story with you. And I tell you stories, try to motivate you. I show you my numbers because some people are motivated by seeing the numbers. So I'm not bragging or boasting. And then I want to show you a trade that I've done, a trade that I can speak to, and typically I'm in the trade. That's that timely and relevant part. So what I want you to do is get your coffee, sit back, and enjoy this video. Subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now what I'm doing is this. I'm going to show you my numbers real quick. Right now for the year 2022, it's unbelievable. What we have been doing for the past 5 and 6 years is actually playing out right now. We are putting money on the table when the markets are in bull mode and in bear mode, because right now we're in bear mode. Make no doubt about that. We're down almost 20% on the S&P 500 year to date. Now, I know some people say, John, step back. Back in 2020, the S&P 500 was down to 2,600. It's currently trading around 4,000. So it's all relative. And I get that. But we're here in the moment. We have to generate cash flow today to pay the Verizon bill, the Visa bill. Okay? Could care less about what happened in the past. But fast forward. From when I started this, selling premium has put $421,000 in my account. That's right. Through selling covered calls, cash secure puts, stock appreciation, dividends for my selling premium portfolio. Okay, this is a portfolio that its only job is to sell premium. It's not buy and hold. It's not dividend collection. It is selling premium. The stocks inside of it are to be written covered calls on, selling cash secure put with the cash. And we do this time and time again. It becomes automatic. It's just a process. And my mindset is its only job is to put cash flow on the table. That's since 2016. So fast forward to 2022. What are we averaging per month now? Right? I got my skill about me. I'm doing the work I have to do in a market that's tumbling. Well, what we're doing is this. Right now we're averaging $7,400 a month. Now, that would be about $3,700 a month if I stopped trading today. July 1st, if John stops trading, he pocketed $3,700 a month. And I'll tell you what, $3,700 a month is unbelievable. $7,400 a month is even more insane. We've gotten to a point now where the $2,500 a month goal is absolutely being doubled every single month. So the skill set is there, right? I'm now that contractor that has my skill. I've had my experience, and I can find myself in any situation. And to be honest with you, I'm looking for the next great trade. That's what I find myself doing these days. It's all about finding the next great trade and pushing that into the next month. It's 30 days. We look to generate cash flow, and we look to do it on a laptop anywhere in the world. I'll tell you what, selling premium is my part-time job in retirement. And let's not forget, retirement starts in about 164 days. So let's go ahead and look at my numbers real quick so we can get to that trade. Now, of course, you know I have a membership, and members see this. If you were thinking about joining my membership, this is when you want to join. Look, what we're looking to do is come out of June into July, and then as the year moves on, the market's going to trade sideways to higher if you're asking me. And there's going to be a lot of great opportunities to use the wheel investment strategy, to use the poor man's covered call investment strategy, and of course, buying shares and writing covered calls. That's what we do here. I show you all of my trades and definitely love sending out my daily emails where we talk about anything and everything that interests me. Always trying to up your game. And of course, you have access to me if you have any questions. I answer so many emails, shedding light on people's situations. I love sharing my thoughts about their trades. So look, go to my website, cptdashboard.com, and sign up. I give you one free month. $5,700 for June. This was a great month because the stock market was really trading sideways. It was really fighting with each other. Didn't know if it wanted to go higher, didn't know if it wanted to go lower. But what we find in June is that we didn't keep tumbling. We didn't fall through support lines. And maybe we're drawing some support lines right now. So I took advantage of that using about $241,000, which is a rotating selling premium portfolio value. I was able to generate $5,700, and that represents 2.39% of that $241,000. We did 14 trades, and as you could see, those selling premium trades produced $5,500 in cash flow. So I want you to imagine, peel off $5,500 and put it on the table to pay the bills. That's what that represents. That money was not reinvested. That money was not used to buy any other stock or double down on stocks that were down. That money pays the bills. With that said, we had some great trades, but we find ourselves in a bad spot. Everybody's portfolio is down, mine included, but here's the deal. We're going to use those stocks like tools, okay? Just because they're down does not mean we're not using them. My trade example later in this video is really going to exemplify that, so stick around. What we did was this. We used the stocks we had. We picked up little crumbs. Look at the crumbs here. You know, a $112 trade 3 years ago would not have been a starter for me. A couple years ago, we were generating $1,100 a trade. Life was great, right? I was doing those weekly videos where I'm knocking down 1,000 a week using one stock. In 10 weeks, we're making 19 grand, right? Well, that's not the case now, because now I'm deep in the hole on some of these plays. The rocket trade. Rocket's trading for $7.36. I'm in at 18 bucks. But I've owned it for 2 years, going on 3 years now. And although Rocket has lost more than half of its value, I've generated over $35,000 in cash flow using that stock. Every single month I take it and I pick up a little 25-cent crumb, if I can get it, put about $700 in the pocket. I have 4,000 shares, and we keep spinning this cash flow wheel. That's what its job is, to generate cash flow. Do I ever think Rocket Mortgage will get back to 18? I would love it to. But I'm going to keep spinning the cash flow wheel with it, putting about $700 a month on the table, and I don't even think about it. I don't even think about Rocket and where it's trading. I just look for the next strike price, and what we look to do is manage that trade and keep rolling it for credits, right? Rocket and me are tied at the hip, and luckily it's kicking me down $700 a month. But as you can see, I generated some crumbs, and it's fulfilling. Because we're spinning the plates, we're doing what we have to do. Now, I did have one leap sale. We talked about this last week. If you didn't see last week's video, you really want to watch that. That's the entire poor man's cover call process. We use Cisco as an example. My Cisco shares were essentially taken away as the stock finished above the strike price. Yes, I ended up buying back the option and selling the leaps. That's how this works. In the real world of regular share ownership, write a covered call, my shares would have been taken away. But when we buy leaps to write covered calls, we have to do a couple things. Now that profited me about $225. I made $15 on the covered call itself, but when we sell that leaps option, which was a 95 Delta leap, we made about 95% of the stock's move from when I bought it to when it sold. So $225 gets pocketed there. Now, the way the month breaks out is simple. The covered call right now is dominating because stocks are trading sideways to higher. Yeah, they're down, but sideways to higher. We'll take that. We did have some cash secure puts come off the board, down on those, but again, we're going to get those in the game. The poor man's covered call keeps producing. Love that. Cash on cash. Look, cash on cash, 11% is of the 241,000 that I used for the past 30 days. But the cash on cash percentage gain of the investments of the leaps, it's off the charts. I love the poor man's covered call. It's an opportunity to use less capital, make more cash on cash percentage gains. I'd absolutely love to have an entire portfolio of about $100,000 using the poor man's covered call. Now, let's talk about the comparisons over the years. We only go back to 2018 here. I could go back to 16. This month is right where I want to be. In 2022, we have advanced such that now it's automatic. Using my selling premium portfolio, we're generating the kind of cash flow that I can bank on. It's $5,700 this month. I think it was $56 last month, maybe $46 the month before. It's consistency in our trading that we can really bank on, and that's where I'm at right now. Real quick, if you remember, if you were with me in 2021, I lost $4,100 in the month of June, but we didn't really lose money. If you remember, I had made money on Workhorse, but my last trade put me in the negative. That was my first red month since I've been doing this. Because remember, my P&L is simple. I post the trade, and when the trade closes, I drop it down and I lock in the gain or loss. I do not go back and try to cherry pick. Place the trade, I drop the trade, we move on. My P&L is raw, okay? If I collect $1 and I buy it back for 50 cents, we note that, we drop it down. In the case of Workhorse, I had sold so many covered calls because if you remember, I had like 2,000 shares. We were generating the kind of cash flow monthly that would choke a horse. But on that final covered call, had my shares taken away much lower, we had to book it for that month. But hey, I will take it because we know last year I made $104,000 for the year. CPTdashboard.com, click Upgraded Dashboard. Man, I would love to welcome you aboard. All right, so here is that trade, and I'll be looking in the comments to see if somebody said, hey man, you talk too much, get to the trade. And yeah, I'll delete that comment and hide you from the channel. No negativity here. Okay, we're looking to be positive and always learning. And sometimes through my stories, that motivation gets a lot of people off the bench, man, in the game, having success, putting real money on the table. Okay, so with that said, here's the trade. Gilead was trading around $68 a share, and it trades in such a range. Absolutely love Gilead. It moves in these $3 ranges. So what we could do is buy it low in the range, and then we write the covered call as the stock moves higher. We can play this range, the ebbs and flows up and down. Now, I'm going to break that down in the chart here in a second. Gilead was trading around $68. I decided to do a poor man's covered call on Gilead. Why? $6,800 would have represented 100 shares. When I ran the numbers in my poor man's covered call initial trade setup, I was able to find a leaps call option that had less than 1% time value. Now, we've talked about this. The time value is the cost of the trade. So when I ran the numbers, I could actually buy 3 leaps call options for the price of 100 shares. So in my mind, I was going to spend $6,800 for 100 shares of Gilead. Now what I did is I bought 3 leaps call options, and now I'm selling 3 real-time covered calls every 30 days, tripling the cash flow I would have created had I bought just 100 shares. Okay, so here's Gilead. Stock has fallen just like everything else. And as you can see right now, it is trading for $62. So let's focus on this for a second. It's now trading for $62. When I wrote this covered call on Gilead, the stock was trading at $59.67. So I did my calculation, right? I picked a strike price that was about 4% higher than the current stock price. Now, there's no magic here, and this isn't rocket science. I picked the 4% number because I feel like the stock can start to move higher, but because it's Gilead, it's a great S&P type company, it won't jump off the chart unless there's news. And right now, slow news cycle for Gilead. So when I picked that 62 strike, it was in my range. And of course, I get a nice little 71-cent crumb here. I'm not looking for a big dollar premium with a poor man's covered call trade. Because remember, the poor man's covered call trade is all about collecting the monthly premium for the 12 months you own the leap. So we're trying to collect that 71 cents every single month for 12 months. Well, that's what I did here. And as you can see, I end up pocketing some $213. This is a perfect monthly crumb for the money invested. Remember, I invested about $6,800. I'm generating $213 every 30 days on a $6,800 investment. Yeah, you can see why the poor man's covered call brings value. Now, let's go to the chart. Let me show you where we're at with the trade, why this trade is so important to learn from. Because what's happening here is this. My stock purchase price or Leap's purchase price was at 68 a share. This thing is not trading at 68 a share. If I have my shares taken away, I lose a hell of a lot of money. Can't let that happen. So let's go to the chart right now. I'm going to show you how this happened, why it happened, and what I'm thinking. Now, I'm going to tell you right now, if you are in this situation, you're worried, right? You think you're going to have your Gilead shares trade. You don't know who to talk to. You get 1 free month as a member, and I'm going to answer that question for you. So if I go back, you can see Gilead does trade in that range I keep talking about, right? I mean, this is so bankable right here. And for me, love trading Gilead. We could trade this all day long. We buy the stock here, we write the covered call, we have our shares taken away as it goes higher. If we're stuck with the shares, that's okay. As it peels off, we can wait to hit support again, and as it moves higher, we keep writing covered calls, okay? We write the covered calls, we buy them back, we pocket that premium, and we keep spinning the plate of cash flow. Well, let's take a look at where we're at today, because you know the story. Gilead was trading around 68 when I got involved with it, and can't remember if it was on this side of 68 or this side, but here we are. I own Gilead at essentially $68 a share. I bought the 3 leaps, okay? The 95 a Delta leap. So I am basically in for 68, okay? Well, Gilead's trading for 62 and it got as low as 58. Now, I'm not sweating this because remember, the poor man's covered call is a 12-month trade. I'm going to just keep spinning the little premiums. But this is what happened and kind of caught me off guard. So you know how I like to trade this, right? As Gilead starts to break a little bit higher, I like to write that covered call right here, and then the stock will peel off by expiration. And what I'm hoping for is that it peels back, I could buy back the option. So in this example, if I made 71 cents, I could buy this back for 3 cents. We take the obligation off the board, and we can look to write another covered call. Well, this is what's happened. This time I played very tight, right? That 62 strike was pretty tight when it was trading at 59. And the markets have actually improved. So here we are with 21 days left, and Gilead is now playing above 62. This thing could easily trade anywhere in here, leaving me in a very bad spot when expiration comes. I'm going to have to make a decision, because clearly I could have my shares taken away as Gilead trades above 62. I want you to notice something. Gilead had its dividend right here. That's very important because if Gilead was about to have its dividend in the next 21 days, you know they'd come in and swipe my shares. It's very important to keep company events in the forefront here. When's earnings? When is the ex-dividend? Now, earnings is going to be around July 22nd, and I crafted this covered call so I could end it before July 21st. So on the Wednesday of the expiring week, I plan to close this. Why is this trade so important to be a great covered call writer? We have 21 days left. Now, 21 days is time that either works for us or against us. With so much time, and if Gilead doesn't retest into the 50s, it could be basing for a move higher. And the time part of that will work against me. Because if we're now starting the clock of Gilead now basing at 62, this could find itself at 65 with no problem. And now time has worked against me, okay? Time can also work for me because we do have 21 days and Gilead has made a tiny, tiny little run and maybe Wall Street sells it off. I'm going to have to make a decision. The decision is this. I'm going to lose money on this trade if Gilead stays above 62 and I close this trade out early. Why? There's so much time value. There is so much time value, the premium is going to be high. And when I buy it back for more than I got paid, remember, got paid 71 cents, I might have to pay $1.75 or $2.75. So now all of a sudden, this premium only trade where all I wanted to do was generate a positive premium, I'm now losing money. So every 30 days, I'm losing money as I'm trying to roll it forward. But I'm rolling it forward not to have the shares taken. It's not like I'm rolling it forward to make more credits because it's a premium only trade. Yeah, granted, I could keep writing covered calls and then sell the leaps higher, but we're losing real money. And let's not lose focus. Its entire job is to put money on the table during these 30 days. It's a missed opportunity to pay my bills. This isn't a buy and hold trade, okay? These leaps of Gilead are meant to generate cash flow. The cash flow I need to pay my bills. So it's very important to make a decision. If you find yourself in a spot, whether you're in a leap situation or you own the shares, okay, with 21 days, you can take the approach. Gilead's above my strike price of 62. Okay, it could be basing here and it's probably going to go higher. You have to make a decision. Now might be a time to act. You buy it back and you roll it another 30 days, or you roll it another 3 months, right? Put the time out there 3 months. So you pay back the buyback. The buyback's going to be more than 71 cents here. Then you do the 3-month covered call. You can pay for the cost of the buyback and make money. Yeah, you moved it out 3 months, but you're still making money. For me, Gilead's job is to sell premium for the next 30 days. I really could care less where it's trading. 59, 69, 79. Doesn't matter. Its job, sell premium. So what I want you to do, what I want you to take away from this video is this. When you write the covered call, stock's trading at 59, you write the 62 strike, you're in at 68. It happens. The stock will trade above your strike. But as I found with many of my stocks, this market will take 1 step forward and 2 steps back. So you don't have to get antsy. We don't have to have trigger finger, but do understand we're now in the danger zone because we're in at 68. It's now above your strike price. Now is the time to start thinking about this trade. And that's exactly what I'm doing. So for me, I may have picked too aggressive of a strike price. This should have been the 73 strike now thinking about it. But with that said, I'm knee deep in the dirt and we're going to have to manage this trade so I don't lose my shares. Now, if you find yourself in that situation, you want to ask somebody who knows how to get out of these things with a little bit of skin, join the membership. I give you 1 free month, and I will definitely give you What Would John Do? Hey, look, I'm going to leave it there. 1 free month waiting for you. Would love to welcome you aboard. Hey, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.